Hello, chart watchers and Decision Point faithful. Welcome to this Thursday morning, May 7th Decision Point show. We are recording on Wednesday night, May 6th, but we do air first thing in the morning on May 7th on Thursday. You are joined by Carl Swenlin and Erin Swenlin, your hosts for the day. And for those of you joining us for the first time, we do hope you will come back to our show and watch it on StockCharts TV. And of course, for the DP faithful out there, welcome back. All right, let's take a peek at our agenda, and then I will pass it over to Carl. So some of the things we're going to talk about today is something we heard about the S&P 500. Of course, everybody wants to know what's going on with oil, and of course, USO had that reverse split. And we wanted to talk a little bit more about that. We're going to discuss what Chapter 11 versus Chapter 7 means as far as bankruptcies go, because we think that's going to be important to know, sadly, coming in the future. And then we're going to take a quick peek at the FAANG plus stocks, just those 7-8 stocks I think are of interest. They lead the market. They lead the indexes, so we're going to look at those, and then we'll just cover everything else under the title of grab bag. So if we have time, we'll throw in a couple of charts that are interesting to us. So let's go ahead and get started. I'm going to start actually with our DecisionPoint Scoreboards, and I can tell you that I know that the S&P 100 today is getting a intermediate term trend model buy signal. I haven't input this just yet because market only recently closed a couple hours ago. And at this point, we have the NASDAQ 100 with the only other intermediate term trend model buy signal. And again, these are based on a silver cross, a 50-day positive crossover. That's what gives you that buy signal or a silver cross. So that's what we look at here at Decision Point. And then the sector scoreboard, this is actually not up to date. I didn't put the new one in, but we do have a buy signal now on consumer discretionary and also on, I believe, comm services came through yesterday. Am I correct?
Yes.
I thought so. So these are actually buy signals right now as of yesterday and today. So I will get those updated in the Decision Point alert. So you will have the most recent scoreboards right there for all of our subscribers. You will have that. All right, so let's go ahead and look at some charts and talk about USO and the WTIC, the spot price.
Okay, I'm going to share.
Mm-hmm.
We've been covering USO and the Decision Point Alert for many years because I thought it was a nice, smooth vehicle to observe the price of oil. And
it worked with our trend models, right?
Yes. But recently, let me get a pointer here. I forgot to do that. Recently, the fund almost blew up. The way it works, they have their money in the front contract of oil futures, and as that's about to expire, they roll the money into the second month contract. Pretty simple. But about 2 weeks ago, the front contract went negative by a lot because basically nobody wanted to accept delivery of the oil, and there was no place to put it. And anyway, it was a big mess, and I decided the heck with this. What we're going to do is we're going to be following the oil market with the continuous contract for
yeah, the West Texas crude,
yeah. And the issue here is that when the contract rolls on this, you get some rather on the day of that roll, you get some rather large movements on here, so it doesn't play well with our trend model. So we're just going to observe it. I think we need to know what's going on in the oil market it's just part of one of the things, of the many things we need to know as market participants. But I can't get the spot price except without paying a huge amount of money. And so this is what we got, and that's what we'll be using from now on.
Yep, absolutely. And somebody did mention USL as a possible, trading vehicle for oil versus USO. And I have to say, when I was looking at that chart and, overlaid the West Texas on USL, it was certainly a better match, I guess I would say, than USO was. And after that reverse split, it really kind of threw things for us.
Yeah, maybe that'll be something to consider in the future. But right now, with as crazy as things are, I don't think I'm gonna. I think I'm comfortable with the
Yes.
I see. So there's that.
Yep. And since we're looking at an oil chart, what are you thinking about oil? It looks like we've hit some overhead resistance.
Right. Yeah. And I don't really have a lot to comment with it. Just kind of want to know. I kind of want to know what's doing, but other than that, it's really hard to tell what's going on.
Right.
That's the way I feel like. And I try to make sense of it. Just be aware. That's the way I feel.
Mm-hmm.
Okay. So, this is a chart. Just veering off into the weeds for a minute. I saw this on the Business Channel the other day. They had a big move, and I thought, what's the chart look like? Well, this is pretty crazy. This is the weekly chart.
Oh my goodness.
Wayfair, and this is it was down here in February, and it's the new all-time highs. It's up today. This is crazy, but
47%, 47.5 this week so far.
right. It's kind
I
of.
don't know. Do you know what's behind that? I'm sure there's viewers out there raising their hand. I do.
No, I don't. But yeah, I won't go any further than that. I could guess, but I don't know. Okay, we were talking about Mulligan's thoughts from the front line. It's a free newsletter that he puts out. John Malden.
Yeah, John Malden, Mauldin, Malden Economics. Highly recommend
it. And he's got huge amounts of contacts in the business, and he's really brilliant. And I've been following for nearly 20 years, just to learn things. And one of the things he said in his last letter was that in 12 to 18 months, over 100 of the components of the S&P 500 won't be in the S&P 500 anymore. And that's pretty astounding. One of the reasons that they would be pushed out would be that they don't meet the market cap requirements. Now, and considering the circumstances, they might waive that for a while, Mm-hmm. But one of the things that probably won't waive, and that's companies that are in bankruptcy. And a lot of companies are going into bankruptcy. That's it. Now, when you start hearing about it, many of you know, many of you don't, but basically two kinds of bankruptcies we're dealing with. Chapter 11, which is a reorganization of the debt, and Chapter 7, which is basically a liquidation of the assets of the companies gone forever. With the organization of the debt, basically they stop paying everybody while the bankruptcy court helps them decide what's the best way to organize the debt and pay it back, or at least part of it back. But this takes some time, and all those, while the creditors are waiting for that particular company to come out of bankruptcy and start paying them something, well, they themselves could go bankrupt. And I'm afraid with this kind of cash flow problems we're seeing out you know, virtually everywhere, we're going to see a lot of, um, you know, the uh, bankruptcies are going to beget more bankruptcies, will beget more. And it could be really, really scary. So when something you own the company goes into bankruptcy, well, it would be useful to know exactly what the issue is.
Right. Yeah, and it just brings to the forefront what we've been discussing. We discussed today, just the two of us, was, the market just doesn't seem to. It's like there's blinders, and everybody's really playing into this new bull market phase, right? We're starting up. Yes, there'll be a little bit of hiccups along the way, but I don't think that overall that the market and the market participants have really thought this out as far as the idea that we could be seeing that sort of shakeup on the S&P 500, on, of course, sectors. It'll probably affect them. And, there's no ducking this, in my opinion. It's going to happen. We're going to have, this is just economically, this is going to happen, especially when you look at 34% unemployment. If you have a third of the people out of work, they're not going to be spending money. And our economy, as everybody's noting, is consumer driven. So
We really, yeah, have very little idea of what this is going to look like in a few weeks, a few months. But it can't be good. I mean, there's such a thing as looking across the valley, but when you have to cash those shut off, you're in trouble. I put this S&P 500 chart up because we were discussing this before you started the show, that in this area here, this looks like pretty calm area of movement, but basically from the bottom of it to the top is 8%. That's a really wide, that's not normal movement. It's a lot better looking than this, but over here is where you see some normal movement. So uh, things haven't settled down yet. We haven't seen the end of this, and in spite of the fact that the market doesn't come down when I think it should, here we got that to deal with.
well, we did lose today on Wednesday. We had quite a slide because we started off up quite a bit, and we've managed to slide lower by the end of the close. In fact, I'm going to keep yours up there, but I'm going to try and pull up a 10-minute bar here on my screen. But yeah, you can see that we have that wedge, and we didn't really break down from it. It's really kind of a slide sideways, but as you said, it looks like it's just a little bit of consolidation going on there. But that's a pretty wide margin.
Yes, it is.
All right, let's get this intraday chart ready here. I apologize. I should have had this going right away.
Well, I still have it. Let me,
okay.
I wanted to, another thing I heard on the Business Channel this morning was that there are 5 stocks in the S&P 500 that represent 20% of the total market cap of the index. Mm-hmm. And of course, we know what those are. I can't get this thing out of the way. All right. It's going to be, here's my list of FAANG Plus, and basically it's Apple, Amazon, Facebook, Google, and Microsoft. I don't think Netflix was included because it's either Facebook or Netflix, and I don't think Netflix has the market cap. But when you've got that kind of heavyweight of just 5 stocks, it's insane. Let me go look at the. I made up a chart here to show see, there we go.
Mm-hmm.
Now this is comparing a SPY, which is the cap weighted version of the index, and then RSP, which is the equal weight version. One of the things to remember is that equal weight is sometimes better and sometimes worse performing. And mainly it performs really well. This is a relative strength here. It performs really well at the beginning of bull markets, really shoots up. For example, let's see from here. Yeah, this is RSP, 133%. This was 89%. Our most recent rally, RSP was up 39%, whereas the SPY was only up 32%. And so it goes. And also on the downside, it moves faster. RSP does on the downside. So from the all-time high to the March low, it was a 35% decline for the SPY, 39, almost 40% decline for RSP. And it's the same, you'll see that here was 63%, here's 57%. And so it goes. Anyway, I wanted to cover that, and I thought that was really an interesting piece of
Well, you know, it seems to me, and I'm just thinking a little bit out loud here, but you know, when we start off a bull market, when we really want things to start moving forward fast, is you need to have participation across the board. And so when you start seeing all of the components, let's say, participating, then you're going to end up with a better result, I would think, out of an equal weight. And that would explain it. If you're cap weighted and you're stuck with what's going on with those top five.
I think what it really is that small caps, and of course, this is a big cap index, but there are mostly smaller cap stocks within the index. And in rallies, more money is going into the small caps and they rise faster.
Mm-hmm.
In declines, they suffer first. In fact, you'll notice that if you study this a little bit, on the way up, the small caps start faltering. You notice from here is about as good as they got, and then just kept dribbling off until the major decline. There was not really much difference between the two indexes and these two advances here, but
Interesting.
yeah, it has to do with the smaller caps getting more money at the beginning and losing more money at the
tail end.
So I'll pass it back to you.
All righty. I have that 10-minute bar chart, so we can just have a quick little discussion about it. So back here, of course, this was on May 4th. This was Monday, and we had a pretty much an ascending triangle. I mean, it was about as textbook as it gets. And you know, at the end of the day, we were just starting to get that moving out of that and starting to fulfill that minimum upside target, which was around here. But we faltered as soon as we hit that declining tops. You know, we hit that declining trend in the short term and it started to fade a little bit. But we got the big gap up the next day. I was a little bit surprised. I wasn't expecting a big gap up on Tuesday. And then today you can see we started off with a really nice move to the upside. Of course, you've got a shooting star candle here, so that probably was a warning. And then we've been, you know, we consolidated mostly, but we really tailed off here at the end on the S&P 500. So, you know, and that broke this support level. It broke, let's see, we've still got this support level at 2840 left right here. But it looks like it stopped just about at the same point we had that gap support right there. So interesting. And I have to say, I know the Swenlin trading oscillators have been pretty right on, as I've been writing in In the chart watchers and in the DPA, everybody is familiar. The Swenlin trading oscillators, they've been doing really well. I'm curious, I haven't looked at them, to be honest, since I opened up my computer. I always wait because I want to make sure they're up to date. But as you can see, they are still falling. I had hoped that if we were going to get this bump like we did in this rally, that we might see them tick upward and then we'd have rising bottoms, but no such luck. And they're continuing lower below. They're not oversold either for this bear market. You can clearly see that. So this does have that feel of a rounded top right now. And I would suspect we are going to see a move back down to test at least that 270 area. That's what I'm going to be writing about today anyway in the decision point alert. And really, if you just look here, you can almost make a case for a head and shoulders getting ready to develop here, with that being a head and that being a left shoulder. But I don't want to get ahead of myself on these chart patterns. I tend to do that, and it's not always good. So looking at the stocks above their 20 and 50, our PMOs rising, you can see that that tailed off early as well. So we already had some warning that there were problems before we got that decline. And I have to say, they ticked up yesterday. I was thinking that was a good sign, but I didn't take it for much more than a slightly good sign because of the Swenlin trading oscillators still pointing directly down. But now we're seeing the deterioration there on those stocks above their 20, and the PMOs rising has really tailed off. Back here, we actually had 100%. We had 100% of the S&P 500 rising right back here, right before that first decline. So we were quite overbought. And since then, it's just been declining tops, and now we're starting to drop even further. So you're not going to get higher prices if you've got momentum going negative. And right now, 43% of the S&P 500 has negative momentum. Their PMO is declining. Not good. All right, so I think we had some time to look at these FAANG Plus stocks. I thought that I would go through them and give you sort of my sense of what's going on with them. And Dad, feel free to interrupt at any time and agree. That would be especially good.
All
But
right.
if you don't, if you don't, you can certainly give some insight here. But you'll notice, I think on all of these, Dad, I think they all have rising wedges. And as I had talked about earlier with you, most of these charts have rising wedges because guess what? The S&P 500 has a rising wedge. Most of the major indexes do. So you're going to see with a lot of these stocks, especially the ones that make up 20% of what's going on with the S&P 500, you're going to see a similar chart pattern. You're going to see similar price action. So anyway, this is Apple, and I actually suggested this one. I had picked it up as a DP diamond on Monday. It was coming up on my scans. I liked the setup on the chart because we did have that rising PMO, and you can see that rising bottoms on the OBV. But since then, if you look in the thumbnail, we've had a negative divergence here with the OBV, a pretty significant one. But of course, volume took off. It kind of negated that. We do have the 20-50-day PMO crossover, which is good. We don't have an overbought price right now as far as the RSI, and it's moving higher, so that means price is moving higher. This point, this is the spot, 305. That's what we need to watch. That's where that gap was. It also could be a reverse head and shoulders that's shaping up here. And if you get that breakout, I mean, technically the neckline is sloping and we've gotten that breakout, but I would err on the side of caution. And this is where I'm going to be watching, that 305 area. So if you have it, that's the area you want to watch.
I agree.
You agree, okay. Amazon. You know, Amazon I thought was looking pretty good. You had the really nice rally that we had here, brought that PMO up, and then it started to falter. And at first I thought, well, maybe we're getting a nice looking flag here. I'm not so certain about the flag right now, but I do think it's positive. We're seeing the price staying above that 20-day EMA. That's always a good support area. When you start losing that, that's why we track it as one of our indicators. When you fall below that 20-day EMA, that's generally, you're going to see some follow-through decline on that. And you can see in the thumbnail, never actually closed below that 20-day EMA. But boy, a PMO sell signal like this and very overbought territory, I would be tightening a stop if I had it. I do not own this one.
And
But
there's a reverse divergence on the OBV.
Yes.
You
So
notice-
despite having increased volume and making these new tops on the OBV, we weren't able to really do that as far as price. And that also is, that can be a good thing.
It's saying the volume cannot get price up there. That's the problem.
Right.
Volume is not driving price. So.
And that's a sign of weakness. And then notice the RSI is starting to, it faded out here after it was overbought, which is expected, but it's trying to stay in that positive territory, but we'll have to see. I want to get to the rest of these really quick. So Facebook has been developing a parabolic move. It still doesn't have that 5,200-day crossover. I don't like parabolics. I know we talk about them all the time, and you can see with the RSI, while it is positive, we are starting to hit that overbought territory, and typically overbought territory leads to declines, just forewarned. So we're getting to that point with Facebook. Overhead resistance, certainly the 220, 225 area. PMO still looks great. OBV is still doing what it needs to. But you've got that gap. It was actually covered for Facebook, but we didn't see that on Apple. All right, Google, rising wedge, textbook rising wedge, I would say. And it hasn't, we haven't seen price really get all the way up into the apex. So this pattern tells us we should expect a breakdown. PMO is still looking pretty good. OBV is, again, doing the right things, I would say, but let's see. Yeah, I think the OBV is confirming it looks okay, and you are seeing a rise on the RSI right now. So I think there's still some upside potential here, but you need to be concerned about that rising wedge. All right, another rising wedge. This is Microsoft, and it's in that software space. Software has really been performing quite well during this bear market, and Microsoft really is no exception. It's doing well. I like the way the OBV is now acting. Now you can see back here we had that negative divergence, but it wasn't really as stark, I would say. And now we've got it moving up. We've got a higher high off of that higher price high. So that's reacting the way we want to, but the PMO is getting overbought. I do like that the RSI is staying in that positive area above net neutral. That's a positive. So we may actually be able to see Microsoft start testing some of those all-time highs. And Netflix, full disclosure, I do own Netflix, and I've been debating it because I have this PMO that turned over. The PMO is now starting to flatten out. It does look like it wants to move higher. I had been hoping for a flag, but it looks like, we got that failure. Right now, my target is just to get back to that all-time high, and at that point, I'll probably tighten up my stop quite a bit and then take some of that profit.
Time?
Yep, time. Looks like we're done. I'm going to show Twitter just because I thought that one had an interesting pattern. We are getting that rising wedge, but there's a lot more upside potential here. It's just not performing the way it needs to, but it's one that I'm keeping an eye on. But you can see that it likely has broken down today below that rising tops or rising bottoms trend line. All right, it was a great show today, and I hope everybody has a good market day on Thursday, and wish you happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.